Trump's financial policies are crumbling, and so is his support. How long can he keep up this fight when Wall Street and Main Street alike are turning their backs on him? As markets plummet, consumer confidence hits rock bottom, and the economy teeters on the edge of chaos, the question isn't just whether his plan will work, it's whether his presidency can survive the fallout. The cracks are showing, and they're hard to ignore. Recently, CNN reported that some billionaire and business leaders, leading leaders in the US, are strongly criticizing President Donald Trump because of policy import tax which he proposed. These criticisms are no small matter, as they not only affect large corporations but also ripple across the entire global economy. With this tax plan comes a wave fear has spread throughout the world: global investment. This does not just stop at the numbers on the balance sheet, but also has a strong impact on investor psychology. Financial markets have begun to show signs shake. Stocks fell sharply, indexes turned red, and losses continued to increase. But what's even more worrying is the fact that decrease in confidence from consumers. When people no longer have confidence in their financial future, they start tightened spending, leading to a series of unpredictable consequences. And yet, the government bonds America is also in the same situation: sell-off. Faith in copper US dollars is reduced, causing it to become weak more than ever. This instability serves as a wake-up call to those who still support Trump's tax policy, showing that not everyone thinks this is the right strategy. When Donald Trump's tax policy was announced, not only people but even powerful people in the financial world began to speak out against it. Bill Ackman, a former Trump supporter, has compared tax policy to economic nuclear war, warning that without change, investment will stagnate and America's reputation will suffer lasting damage. Jamie Dimon, CEO of JPMorgan Chase, warned that tax policy will cause inflation, slow global growth, and weaken America's position in the international arena. Billionaire Stanley Druckenmiller does not support taxes higher than 10%, fearing it will weaken the economy and businesses. Ken Fisher called Trump's tax plan stupid and wrong, while Elon Musk called for a more balanced trade relationship between the US and Europe. Finally, Simon McAdam points out that tax policy causes instability, making businesses hesitant about long-term investments. With such strong reactions, Trump's tax policy is clearly creating turmoil in the US economy and global financial markets. When Donald Trump announced the tariff policy, it was like a tsunami hitting the US economy. 10% basic tax applies to all imported goods, which is not a small number, but it is just the beginning. The following numbers made the financial market even more wobbly. China, a major trading partner of the US, will face 34% tax, a sky-high ratio, enough to cause immediate stress. The European Union, with its long and complex trade relationship, will not escape this pressure when it comes to tariffs 20%. But behind this decision, Trump have their own reasons. He explained that this policy aims to rebalance the trade balance, something he believes is long overdue disadvantageous for America. In Trump's eyes, the US has had to endure high tariffs from its partners, while it itself only imposes lower tariffs on their goods. However, despite good reasons, these huge numbers scare many people fear. And not only that, they have also sparked a strong wave of opposition from investors, who are starting to feel instability in the US economy. Just like that, these decisions are creating one storm in politics and economics, where no one is sure about the coming future. As Trump's tariffs take effect, the impact goes beyond balance sheet numbers. The whole society, from people to investors, feels the profound change, and no one can hide their worries. Data from the University of Michigan on April 11th showed an undeniable truth. The US Consumer Confidence Index in April dropped 11% to only 50.8 points. This is the lowest since 2022, and the second lowest in more than 70 years. This not only reflects people's concerns, but is also a sign that they are losing faith in the future. So, what caused this sharp decline? The main reason is the prolonged trade war that Trump initiated. Trade tensions not only push up prices, but also create a profound impact on people's psychology. People are worried, regardless of age, income, or region, and even political trends cannot avoid being influenced. John Su, survey director at the University of Michigan, pointed out that consumer confidence has dropped more than 30% compared to December 2024, a shocking figure. And as consumption declines, US GDP, which is largely driven by people's spending, is also seriously affected, leading to a decline in economic growth. All these signs show that Trump's tax policies are causing chaos in the economy, and that confidence in the future is eroding day by day. I thought everything was gradually calming down. Well, Trump makes waves again. On the day April 9, he suddenly announced postpone additional reciprocal taxes for 90 days. But don't rush to rejoice. This is not a sign of peace, but just a calm before the storm. By basic import tax, 10% remains intact. Not only that, taxes on Chinese goods skyrocketed to 125%, a direct blow to America's biggest trading rival. With this move, Trump not only wants to balance trade, but also exert comprehensive pressure on the Chinese economy. Can't sit still, China immediately counterattacked. Just 2 days later, enter April 11, Beijing announced impose 125% tariffs on U.S. goods, from agricultural products to technology. Tensions escalate without end, and the person standing in the middle is businesses and people of the two countries. The financial market is chaotic like a widespread tremor. Initially, investors were hopeful when they heard the news of tax postponement causing U.S. stocks to rebound slightly. But in the blink of an eye, that hope disappeared. When the White House confirmed new tax rate up to 145% with China, the market immediately plunged nearly 3%. From Wall Street to international exchanges, everyone is holding their breath waiting for the next move. Because in this tariff war, there are no winners, only those with less to lose. And the price the global economy is paying is looking increasingly expensive. As the trade war between the U.S. and its partners became intense, the U.S. dollar began to lose value. Investors quickly sold off dollars, causing the dollar index to fall to 99.7 points, its lowest level since mid-2022. This is a clear sign of loss of confidence in the U.S. economy and a change in the way investors view the market. Brad Bechtel, director of foreign exchange at Jefferies, said that investors are reassessing the strength of the U.S. economy and turning to safer assets such as the Japanese yen and Swiss franc. At the same time, U.S. government bonds are also facing difficulties, with 10-year bond yields reaching 4.59%, the highest level in 13 months, causing investors to begin to doubt the government's ability to repay debt. These fluctuations not only reflect the numbers, but are also a sign that Trump's tax and trade war policies are having a profound impact on the global economy and investor psychology. In just 1 week, the atmosphere on Wall Street suddenly became suffocatingly heavy. Goldman Sachs, one of the financial giants, has repeatedly adjusted its warnings, and each time it's more gloomy than the last. Their latest forecast shows U.S. GDP growth in the fourth quarter of 2025 is only 0.5%, and more worryingly, them raising the probability of the U.S. falling into recession within the next 12 months to 45%, a number that makes investors restless. Not stopping there, within a few days, Goldman Sachs raised its recession warning twice in a row. This shows that the situation is changing rapidly and in a bad direction. Goldman Sachs is not alone in speaking out. A series of other financial giants also simultaneously turned on the alarm. BofA Global Research, RBC Capital Markets, UBS Global Wealth Management all emphasize one common point. If Mr. Trump continues to maintain his current harsh tax policy, the risk of recession will rapidly escalate. Experts see clearly. Tariffs are not just a trade tool, but are now becoming a poison for the economy. Another mistake, and America can slid into a terrible recession. As consumer confidence declines, businesses hesitate to invest, and financial markets are constantly on red alert. Everyone is asking the question, does Mr. Trump realize what he is doing, playing too risky a gamble with the world's largest economy? While the White House still tries to maintain a tough tone, outside the United States, international investors have stepped in, and the blow they delivered was not light. No need for loud announcements. Large investment funds quietly sell off U.S. government bonds, a move understood very well by the financial world. Send a warning signal and put pressure on the Trump administration. This is not simply a financial matter, but a playing card move in the game of commercial chess. When they sell bonds, yields increase, the market fluctuates, and political pressure on the president is also greater. Not only that, global trade flows also began to change direction. Many countries reduced trade with the U.S., leading to natural consequences. Demand for U.S. dollars decreased sharply, and when the dollar weakens, confidence in America's economic strength also shakes. Wall Street analysts themselves pointed out the turmoil in the bond market is the reason why Mr. Trump was forced to postpone the imposition of reciprocal tariffs for another 90 days, a move that is considered a rare step back from a famous stubborn person like him. The question now, Is this the starting point of a forced watering down when global financial pressure is increasingly tightening Donald Trump's economic policies? Even though things are showing signs of losing control, the White House still appears calm. Economic advisor Kevin Hassett quickly spoke up to reassure public opinion. He admitted that the bond market is having an impact to President Trump's decision, but there was no panic. What is here? It's all just part of a long-term strategy that America is doing. Treasury Secretary Scott Bessent, not to be outdone, continuing to maintain the view that current developments, although unpleasant, are still completely inevitable, normal in a large economy like the US. He affirmed that there's no reason to panic and that everything is according to plan. With this answer, the White House seems to want to send a clear message. Even though the market fluctuates, we are still in control. But is this strategy of maintaining a mask convincing enough when economic risks are increasing? When looking at the plunging financial market, Bill Ackman do not hesitate to make a strong statement. Stocks fell, bonds plunged, the dollar weakened, all of which are clear signs that Trump's tax policy is failing. For investors and experts like Ackman, this is not the case of victory, which is a serious step backward in U.S. economic strategy. The final warning comes from the leaders of the financial world. Will Trump's policies really bring America to the peak he promised? Or is it just your stick hits your back, where the short-term consequences could be undermining confidence in the world's largest economy? The answer is still open, but all signs point the storm is not over yet.